Hi guys, Sam here from TradeDevils.com and TradeDevils-Indicators.com. Today we're looking at the latest addition to our lineup of tools for Ninjatrader 8. This is the Trader's Dynamic Index, or perhaps I should say our version of it. Now the TDI, as it's often abbreviated, this has been around, I think, since the late 90s, mid 90s. A Forex trader named Dean Malone put it together, and it's very popular amongst FX traders. It certainly has application for us here as futures traders. So this is our version of it. It's an interesting hybrid combination of indicators. At its core, it's an RSI with some Bollinger Bands applied to it, but it's a little bit more sophisticated than that. Very useful here, and it's we like it very much here. In fact, it's something that we include into our graphical order flow template because of the amount of information that it gives us in addition to everything we're doing with the graphical order flow. So I have here in front of us, this is a 1 minute chart of the NQ, and as I always do, I record these on the weekends, and I just use the last couple of days of data. There's no need to cherry pick anything. We just use the most recent couple of days. Now on the chart here, I have our initial balance indicator just to frame up the day so we can see kind of a beginning, middle, and end. I have a 21 period McGinley, but a 21 period EMA would be a good approximation to this. Just something basic to get a sense of the ebb and flow of the trend throughout the course of the day. Now as we look down to the TDI, what's important to recognize here is that everything within this is a derivative of price. So while we do have a traditional RSI in this colored line here where you see it go from green to red, so that's the RSI. The white line is an average, a moving average of the RSI. And then the Bollinger Bands are applied to the RSI. So for example, this is a 34 period set of Bollinger Bands applied to the RSI. So if you were to take just the native Bollinger Bands with a Ninja and apply a 34 period set of Bollinger Bands, it's not going to match because there's a difference between the Bollinger Bands applied to price and Bollinger Bands applied to the RSI. Right? And I think what you'll see here is there's real advantages to looking at it this way. So as we break it down here, what I think maybe the best way to do it is to give you a comparison between just a traditional RSI and what the TDI offers. Let's open these up a little bit here so you can see it. So this is just the native RSI that's within Ninja here in the default settings. It's a 14.3. Now we do modify and change the settings here. Now of course all of the numbers that you're using for the RSI, the moving average, and the Bollinger Bands, those are all set to whatever your preference is. Through our testing, we find that this is a particularly good combination. But again, do your own testing if you want to tweak it slightly here. I'm using all fib numbers here. So I've got a 21 period RSI, an 8 period moving average, and then a 34 period moving average, Bollinger Bands applied to that RSI. And then I'm using a 1.62 for the deviations from the RSI. All right, so if we look inside the indicators here, you'll see what I mean in a minute. But let's just focus on here what we can see. Now, so here, here I'll just kind of grab some tools here. So we see that we come out of the gate here, and it's a very nice uptrend here. So even if you were looking right here, you can see some of the benefit of this. So as we're approaching the open for Friday, you see the contraction of volatility. Let's see if I can draw down here? Yeah, I guess I can. So you see the contraction of volatility here as the Bollinger Bands are closing in on each other here, and then the explosion of volatility once we get into the open, or once we open and approach the open. So obvious, of course, you would anticipate that at the open we're going to get a big push of volume, and you're going to see volatility. So this is not unusual. But the reason I draw your attention to this is because I want you to focus on what happens after this and how this is useful to us. So I guess we can take these off. So let me just get our little boxes off here. Okay, so let's get rid of those. Now, so as we come out of the chute here off of the open, well, as is often the case, the first move is in every index that opens is almost always a head fake, right? So, I mean, this is a pretty obvious one. All right, so we go up, we retrace, we go up. Right now, you've heard me say this many times, right? You could break the entire market down, right? Every single swing, right, is just some variation of that, right? That's all it ever is. That's all it ever does. And if we are stringing something together, if we get a bigger move, then really all we're doing is just connecting to such things, right? It looks like an impulse wave. That's all we're ever doing, right? That's all the market ever does, right? And I always mention that to people because I think it's just a nice way to simplify the market, right? It's swing retrace, right? One side breaks. That's all that ever happens in the market. So as we come out of here, right? What a perfect example of it here. So we've got well, from the pre-market low, swing retrace, swing retrace, swing retrace, swing retrace. Up, all of a sudden we're going down, swing retrace, swing retrace, swing retrace, swing retrace, swing, and it starts again. Swing retrace, swing retrace, swing. It's all it ever does. So how do we use this to our advantage? Well, right out of the chute here, you're getting some visual representation. So the way that you want to think of the Bollinger Bands is like a dynamic floating set of support and resistance. So in traditional RSI, we typically will be marked by the 70, the 30, and often the 50 will be marked as well. Right? So it's an oscillation between those ranges here. And of course, it's well known here that in a strong move, the market can stay pinned below 30 or above 70 for extended periods of time, given the strength of the market or the time frame that you're looking at here. Now, on a 1 minute chart, it wouldn't be surprising here that you see this oscillation throughout the course of the day. Here, of course, down here we go down. We don't make a full loop, and we're down again. But eventually, that looping process of that oscillation from up to down to up to down, permeates the course of the day. Now, this was a particularly strong day, right? Anyone who's trading it knows it was just a rip-roaring rally. Yet, despite that, the first push, right, gives us that move up, and then we're all the way back down towards the IB low. So that's 11:15. Let's look at this. So if we think about what we're looking at here, so we have the same range in the TDI, but although it's slightly different here in the TDI, it's typically noted here, and we would encourage you to change it to your liking, but this is the default at 68 and 32, right, rather than 70 and 30. Just a suggestion for much testing. 68 and 32, and actually that's fairly common amongst FX traders as well, that 68 and 32. It's a good starting point. So while we have that same range in the TDI, we're getting this dynamic floating variation of it, perhaps I should say it better that way, through the Bollinger Band. So as we get to the low, just like traditional Bollinger Bands, if you're applying it, as we get to the lower edge of the Bollinger Bands, we know we're 2 standard deviations from that center line, that moving average of the RSI, and that potentially we're at a point where the market is reaching exhaustion. Not required as such, but it may be an area to start looking for the reversal. Same thing that you see happen here as we get up to 70 here. Now here, in this case, the RSI we get a little double top up here at 70, but in the TDI, we can't get to that same level. Now these are different. The RSI is running in different variables here and a different parameter length of time. So this is a 14, this is a 21, so that would explain that difference. But more so, what I want you to see is as we're pushing up here, well, clearly the RSI is green as we're making this move pre-market. Now let's assume you're not trading pre-market and just waiting for the market to open. So the first thing that we see here is we come down, we get the RSI pushing down, right? Not surprising, rate of change of price is falling pretty hard here. Well, here's the open, a little squirt up, and then we're straight down. But note that, again, thinking of this as a floating dynamic support and resistance level, we come back to the center line. Right, you see it down here. We come back to the center line. Now we're pushing back up again. But note that on each of these swings, we have very normal rotation in the market. We're not getting extremes to where we're getting outside of the Bollinger Bands. So this is actually very friendly trading. Because of that, so again, back to my initial starting point: swing, retrace, swing, retrace, swing, retrace. This is incredibly tradable, right? This is ideal. Now, not to digress this early into it, but if you were looking at those, right, that and some of our teaching and what we would consistently tell you is the DNA of the market. This is a series of measured moves. So if I put the measured moves right on here, this is our measured move indicator, which I'm just kind of demonstrating to make the point here. So swing, retrace, we go right to golden zone. Swing, retrace, golden zone. Swing, retrace, golden zone. Now, each one of those green lines, we're hitting the target, right? So we keep hitting the target. But now, so look at it down here. So as we come down, we don't get to the extreme down here. We're not getting deeply oversold. But of course, the RSI comes down, and then we're back up, right? As the market crosses back over the 21 McGinley or the 21 EMA. Up we go. Now, we don't push so far that we're getting outside of the Bollinger Band. So we have just a very natural tradable rotation here. This is very typical for the market. This is very trader friendly when we see this. It's when we get the more extreme moves where a little bit more nuance in terms of how you're approaching the market may be required. So let me pull this down just a little bit here and we take a better look at this. So these are all incredibly just what you'd hope to see right out of the chute. And those are, you don't need a lot of these, right? So here we come down. We go red during the retracement, just what you anticipate seeing. Now we cross back over. Note the center line of the Bollinger Bands goes green, right? So we have that tied to the slope of it. So as that goes green here, we've got this nice little trade right here. Now that's $1,670. Doesn't look like it would be that much, right? But that's 334 ticks in a one lot. Well, let's say you were kind of waiting until the market gets, maybe you want to get through the first half an hour. Well, they gave you another one right here. Right? Now, see, what's important here is not just the swing and the retrace. Well, obviously, what's important here is that we're going right to the golden zone. That's the IB mid, although it wouldn't be defined as the mid just yet. But you have a retrace right to the golden zone, then we go right to target. So here it is. Now, what the tell of this is that whenever the market starts a retrace, let's see if I can get this off of here. When the market starts a retracement, right? We as traders, what are we thinking? What are we concerned about, right? So it's always, oh, okay, here we're starting the retracement. Okay, this is where I want to buy it, right at the golden zone. I've got structure here to play off. But what am I worried about? I'm worried about that. Right? Oh, well, maybe we got a change of trend here. But right now, I've got higher high, higher low, higher high, higher low. But if this doesn't hold and we break here, oh, all of a sudden something else. It might start looking like this. The tell here is that the RSI cannot get down to the lower band, implying we can't even get to the 50. So here the 50 is in yellow here, right at the center. So on this one, we bang the 50. God, I mean, I literally can't script these any better. It pops the 50, and then we cross back over. Right. So not only as we shoot out of this here, we get a nice up candle here. We're crossing the McGinley. The RSI is crossing the average. The center line of the Bollinger Bands goes to green. So we get that nice little pop up here. Now, if you missed that one, oh, thank you very much. They just gave you another one. Note again, the market is not so weak that it's going to push outside of the Bollinger Band. So again, very normal natural rotation. Here's the next one, right? If you missed the first one, there's another $1,475. So you can easily, right? Just two single lot trades. Well, let's assume you don't take the first one because it's too early in the day. Boom, boom. You got about 2,500. Assuming you're not going to get tick low to tick high. You got at least $2,000 in your pocket. You might be done for the day. So just kind of demonstrating that here, but I want you to see how significant this is. It's really significant here that we are doing a normal rotation. See, if you were a Bollinger Band trader, a lot of the training or educational content you might find that would be related to a Bollinger Band is to look for the market to get outside of the Bollinger Bands. Well, certainly there are places where that's significant and the market can be talking to us there and we can use that to our advantage. But when we're doing this kind of easy rotation, this is not to be avoided. This is what you're looking for. Right? If you can get that kind of easy rotation, we're not going so far up that we're pushing outside. We're not going so far down that we're pushing outside the lower band. It's this very nice, easy rotation. Well, now what's interesting here, and again, it's there in the RSI, yet it's not as visually significant. I can't read as much based on what the market's doing down here because I'm losing that concept of volatility. So while I go up here, yet again, as I hit the IB high, I don't get outside of the Bollinger Bands. But look at this, what happens here. So I've had just a, God, it's almost like it's out of a book you drew, right? You can't make this stuff up. Swing, retrace, swing, retrace, swing, retrace. Now here's swing up. All of a sudden, I can't get a new high. Right? Here's the structure break. Right now I've got a lower low. So this, I would tell you that this may not be the trade that you get. Right now, if you're really on top of it here, note here. How would you know the distinction, right? So we've got swing, retrace, swing, retrace, swing, retrace. How would you know that this is not going to do the exact same thing, right? It would be, right, very consistent, right? We'd have 1, 2, 3, 4 of those in a row, right? Well, look at the difference here. Look what happens. Right now, you see it here as well, of course, right? You see it here as well. But this is just striking. We go right, so we get through the midband just as we did here. We come right back to it. But we can't get through it, right? We can't get the, and now, oh, all of a sudden we're turning down. Change of character. So if you didn't get that trade, right, and you might not have, because this was, you might have been, well, I don't know, let's wait and see what happens. Okay, so most are not going to get that trade. I wouldn't have got that trade. But the next one is very gettable. Now, look at the McGinley line, or just look at the 21 period. Right now, what obviously, right? All of a sudden, we're below it. Now, look at the. Now, it's not quite as pronounced here because here we're in this nice sideways, easy rotation. Well, here as we head down, all of a sudden the market is getting dramatically weaker here, and this is so nicely reflected here. I can read more about what's happening than I can down here because now I've got swing retrace happening the other way, right? So let's assume you're not getting this one, but this one right here is very gettable because look. We've had swing, retrace. Oh, let me get the little crosshairs here so I can show this to you. Right. So here's the first one here where we can't get to a new high. Now here's the next one here. Now we're coming back up to, well, that happens to be, oh, what is that? I think that's the pre-market or the pre-market high. We come right back to it, but no, we're coming under the 21 period. We can't get through that. We can't even cross over the signal line here before we go back out again. Now, if I look down here, I could make that same claim. Oh, we can't even get past the 50. But look at how much more. How much easier that is to read. I can't even, I'm outside of the volatility bands. I can't even cross back in. I go outside again. Now I'm trying to get back in here. It just barely, but look at the 21 period. I can't cross back over. Now I'm back down again. Now here, all of a sudden, let me get this off because I know that's can be annoying. Right, so now we've got this series here. The weakness of the market here is really hard to miss, which is kind of what we're trying to do, right? And the way to read this here. Okay, well, right, where's the 21 period, right? We're falling down. Where's the center line, red, right? You've often heard me as I say this in jest, but much of what we're doing here is for my benefit, because I can be a real dumbass in the market because when the market is going down, my instinct is to want to be buying all of these, right? So I have to create tools that keep me from doing that. So as a result of that, thus the very bright, this would be a variation from a traditional TDI that you might find if you just Googled it. Often there's just a yellow line in the middle. Well, we've tied this to the pitch, right? So to the slope of the center line, which this is you can set this to a wide variety of types of moving averages. I think I just have this set to an EMA. So you have a 34 period EMA in the center that is now sloping downward, thus the red coloring. Okay, so what I'm hoping to achieve here is to help myself as well as any traders that are using this stop going long here. The market is literally screaming at you to not short it here. Dumbass, right, as I call them, my dumbass filters. Dumbass, dumbass, dumbass. Well, why are you trying to bite that? But see, that's my natural tendency here. And if you're a retracement trader, well, perhaps you understand that. Right? So this is what a retracement trader is looking at. So I'm looking at this come right into right here, and oh, am I dying to buy that? There's golden zone. I'm at the open. I'm very, my instinct. Well, see, you don't know what's coming, right? You're right. Oh shit, you won't be able to see it. But I'll make this point this way. Right here. at that bar, it looks like you might hold the golden zone, and you'd be looking for something to come out of here and go get that target. Trend's been up. Here's the retracement. I'm at a technically significant pivot here. I know algos may be active here, are likely to be active here. I have a dominant low to a dominant high. Why not buy it? Well, again, that's why I call them dumbass filters, right? 21 period, red. Center line, red. RSI, red. Now you got a little squirt of green right here, but that's what, much like down here, as we get below 30 here, that's not a, oh, well, if it's below 30, I got to buy it. That's not what that's telling you. Now, that's telling you that you've reached a point of, oversold is the wrong way. The market is hitting an extreme here, but that is not a buy signal. You can't trade an RSI as well. I shouldn't say it that way. Some do, right? But I think you'll find that there are better ways to use the RSI than just look for, oh, hey, I'm under 30. Well, I better be a buyer. Well, certainly nothing here is saying buy it. Nothing, right? Wouldn't you at least want to have a change of character where you had a higher low before you started looking at the buy side? So let me get this off of here, right? So this is very much in your face. No. Even though now we're starting to get a little green in the RSI here. Look, center line. Where's the 50? Right? We're not even to the 50. So while we get a little green here, which is, as you see, the RSI is rising. Remember, it's rate of the change of the price here. So all of a sudden, we're getting a little push higher. We note a couple of things, just like here. We can't get across the set of Bollinger Bands, often called the river, right? So here, just think of the blue line as the river. We can't get across the river. We can't cross it. Now we're back down again. Now, note again, as we come down here, we're approaching the IB low, which we know is algorithms are active here. We still can't get below the Bollinger Bands. Now here, I get a little, just a tap of the 30 before we start heading up. Same thing happens here. Now, all of a sudden, the thing starts to change. And this is, I know it's easy in hindsight. All right, what happens? Higher low. Now, what do we do? All right, what is it the market does? That's all it ever does. That's all it ever does, right? Just, you really want to train your eye to think in threes, right? If it's going further, it's just, a continuation of that same thing, right? If it's coming down, it's the same thing going down. Right? It's just always, I would encourage you to try and train your eye to think in series of threes. So every swing is related to a prior swing, regardless of what we're doing. So you can see the change of character happening here. I mean, it's hard to miss, right? Lower low, lower high, lower low, lower high, lower low, lower high, all up, higher low. Now, all of a sudden, look at the 21 period. Look at the RSI. Look at how the volatility starts to contract down here. So all of a sudden, we've gone from this huge range of volatility. All of a sudden, it's starting to slow down. Now we're at 11:15. So this is not an uncommon time to look for European markets are closing. This is often a time that you'll start to see a trend change in the market. Well, could we have scripted this any better? Well, here's about 11:30. All of a sudden, the 21 period's gone green. Now look at down here. At the TDI, all of a sudden we're ripping hard. Now, so through all of this, right, it was only on the down here we were able to get outside of this as this started to accelerate down. Now, all of a sudden I get a monster push here, right? This is a big thrust here. So much so because of the narrow bands, it's easy here because now all of a sudden the volatility is increasing, so it's easy for the RSI to get outside because at this moment in time we still haven't really fully realized the expansion of the Bollinger Bands. I mean, we go from this right to this, I mean really that, right? So we're not quite there yet, so it's easy for it to get out here. So this is a huge heads up. Hey, right? Compare now. Look through the course of the day. Right, so we had a little bit of green out here where we got outside, a little bit of red here, but this really should stand out to you. Now, I know, right? So as retracement traders, and again, this is so much of this I say designed for to accommodate my weaknesses, and I think if my weaknesses are probably shared by many. So as that's going up here, well, first, all right, this would be. Okay, how would you know that that's not going to do this, right? How would you know? There it is, right? There's the algorithm that moves the market. There it is. How would you know that's, get off of there. That's not going to happen. Well, okay. Look where we're hitting the 50, right? Is that something you want to sell into? Look at the 21 period. You're coming right back into all of this structure, right? Is that necessarily something you want to sell into? Well, you might be able to make that case to yourself, right? And this is these are the hurdles we deal with as traders. Swing, retrace. I'm at a 50. I'm at prior structure. Why don't I want to sell that? Well, if you're not paying attention down here, you might. If you didn't have a 21 period EMA, or I don't know what you're using, right? But I mean, for this, right, it's just something as simple as a 21 period, or even just a 20 period SMA. Do you want to sell that right there? Well, I mean, look, just if you're using the RSI. Maybe not. Maybe not. I just think perhaps not. So let's look at it here. So now I get this great visual representation of the expansion of volatility, right? We've gone from this to this. Now, has the price really exploded here? Well, I mean, yes and no, right? I mean, certainly we're retracing all of the down move is being recovered, but I wouldn't call that a massive explosion here. I mean, it looks more so down here. Now, note again, this nice visual representation here, and I think it's more. Let me rephrase that. I think it's easier to read than down here in an RSI. So look what we're getting up here. Okay, so we're getting a series of higher highs, but look at the RSI. Right now, of course, you can see it in the regular RSI as well. Oh, look, it didn't get there. But look how dramatically that really shows right here. Not only can I no longer get to the upper edge of the Bollinger Bands here, I can't make the 68. I didn't even make the 68 on the first up thrust. Right, here's the only time I made it to one of the lower boundaries here is that pre-market move where I got below the 32. Now, so 32 to 68, I have yet to even get there until this move here, all the way out here. So stay with me for a second. Now, so as you look here, right now, 21 period rising in green, right? So it's now after doing swing retrace all the way down. Now I'm doing swing retrace. Higher high, higher low, higher high, lower low, higher high, higher low, higher high. Boom, here's the break of structure, right? We break structure right here. Right now, all of a sudden, I got a lower low. Well, take note now. This is where, okay, a little experience, a little nuance here becomes important. There is no binary buy it, sell it kind of indicator. You have to read the market a little bit here. So as we get outside, note we get a contraction of volatility. All right, so right here we see the contraction of volatility as the market is now. We've had this night. I mean, that is if you're not going to get all of that, but what we got there is $2,400. So it's 428 ticks. So this is a good, significant move here, but the market is clearly showing that it's fading. Now we're just going into the lunch hour, and that is not surprising that we would go sideways, right? This is many traders just don't trade during this period of time. So here's 12 to there's really coming out to. Here's about 1 o'clock here. So this is the lunch hour of just chop, where you really, boy, what a great day for examples, right? Everything is just right by the book here, right? So we just have chop, right? So there's just not a whole lot of interest amongst buyers or sellers during that noon hour, right? And then all of a sudden we come out of it, and now we're breaking through the IB. But the point I'm trying to make here is more tied to what's happening in the TDI. So note here, I'm getting outside of the Bollinger Bands here. I'm quickly back in. So essentially, I get a double bottom here in the RSI on the edge of the Bollinger Bands at the 50. Now that's significant because, take note here, I am not down here at the 32, where this might be, whoa, I might want to be thinking about a buy side here again if it was supportive of the structure, blah, blah, blah. I mean, all the things that we would talk about. But down here, this is not like, oh my God, it's below the Bollinger Bands. I got to be a buyer here. No, not necessarily, right? I mean, would you have made money here if you got that? Well, yeah, you would have, right? If you caught this little pump there, that's $600, right? I mean, it's so. The Nasdaq has been so volatile here, so we get a little swing. You get the same thing down here. I get a swing, I get a retrace. I don't break the moving average, and then I get a kick up here. Now that little kick, I mean, maybe somebody got that, right? I mean, somebody did, right? Maybe you got that. It's $500, right? You got a little swing here. You're going right back to the opening range high. But really, this is it's always easy in hindsight, right? I would tell you very few people made money in here, right? This is, you don't have enough movement here. I mean, scalpers may have done all right, but that's a very difficult period to trade. And you've got the market, this is what you want to try and avoid here. When you see the RSI just waffling around the middle, this is very tricky to try and trade, and that's, and if you look at it, right, is this something you want to trade? Well, probably not. Probably not, right? So this is another tell. We have a contraction of volatility. The bands are tightening. We have the RSI just kind of waffling on either side. Then there's one last push down here to just get to the edge. But again, note where we are in the range, right? I'm really still hovering around the 50. Nowhere threat to come down here towards the 32. Well, now I start to push again. Start to push a little bit again. Now note the center line of the Bollinger Bands, right? Starts to go green. Now again, it's if the market were going to give us nice easy rotation here, you might expect something like this, right? Or maybe like we saw earlier in the day, where we're not getting to either side of it, but we're getting that nice clean rotation that traders look for and like, because it's easy to trade. Let me reset down here. Now as we start to go here, can't even cross the average. You know, a little one candle, one bar, probably that little very tight small range bar here gives us a little squirt of red. But all of a sudden here, now something has changed, because this is now the first time that I've gotten above the 68. And what's important here, and this is something to look for, is not only do I have the RSI above 68, I have it above the Bollinger Bands, but I also have the signal line above the 68 here. So this move here would have been something you might have looked at, right? If you're a scalper, you say, hey, is there a trade there? Well, yeah, there is, right? So maybe you're taking it to the McGinley line. There's 82 ticks. But think about it now. Is that really, if that's the kind of trader you are, and you're just trying to trade these little retracement pullbacks, well, more power to you. I think that would be a dangerous trade to take. Perhaps there'd be some additional information here, some volume related information here, but if we're just focused on what the TDI is telling us here, well, first look at the 21 period. Are we trending? Is what you're looking for here shorts, or are you looking to get into the trend? All right, so really what this is giving us here is a swing and a retrace. Now if I stop, it's hard to get off your mouse. So if I stop right here, look, is this not what that 21 period is for? Oh my God, I'm coming right back to the 21. Right here. Okay. What's important here is not that it's red going to green. What's more important is that I don't have enough volatility here to push down through to the other side of the river. I can't get across. So back up I go. Right now, could you have taken that trade? I think that's an easier one to take and a smarter trade to take. Right now, of course, it's always easy in hindsight. If you're right here, that might have looked like, whoa, looks like it's getting a little top heavy here, and we're coming down. Right, we're red here, we're coming down. Oh, but wait a minute. Hey, dumbass, where's the 21 period? I think this is a much stronger trade right there. Now, you're going to get all of that? Let's assume not. Let's assume maybe you got a chunk of it. There's 97 ticks. All right, it's going up and up. You're trailing. Maybe you're at the low of that bar here. There's 430 on a single lot. McGinley still rolling here. But now again, look. What's important is not just that we're starting to go red. It's that we can't. The strength of the market is not there to get up to this kind of range here. We can't get towards the 32, or pardon me, the 68. I can't get towards the upper Bollinger Bands. The market is screaming at you here. I'm weakening. I'm weakening. I'm weakening. You know, all right. I'm weakening up here. I can't. Nothing's happening here. Boy, is this saying, hey, heads up, heads up, heads up. This would not be a good place to be anticipating, right? Given that I know it's human nature. You're thinking, oh, I know. Okay, they haven't done it yet, but it's coming, right? That's what's coming. All right, so maybe let's see. Maybe you might have thought it there. maybe you're tempted here. McGinley, you're above the McGinley. You've got a little kick at it here. Are you across the center line? Right? You can't even get across the center line. And look how quickly that's rejected. Right? Down we go. That's pretty. Now that actually is a better looking trade. So let's just say you took the break of that low. What do you got there? Well, there's 800. Let's assume you're not going to get it all. Right? There's another 445. You got kicked out here on the break of that low of the low of that bar. So I've got a potential here now for a change of character as this little short retrace finishes. Oh God, some of the other tools we looked at here, I think you find that that would be an area of support, right, based on some volume. Right, so we've got this here. So we're just coming back here and just essentially just doing a double bottom here. Now, but now look, right, this is like, whoa. Boy, the market really kicked down here. We got well outside. Note the red fill. That's why I want your eye to be drawn to that. And now, as we kick back in, is this the trade to take? Right? This is. Oh, let's see it this way. This is not necessarily the trade to take. Oh, where's my? I'm gonna do it this way. Right here. That can't, maybe right for the aggressive trader. That's probably a trade to take. But the better trade, and I think the more highly I want to say the higher probability trade is not the first one, it's the second one, that one right there. Now I've had a swing, I've come back to the 50. See, now this is a bit of a confirmation. It's trying to pick the turn or just waiting for the change. Look here, let's see if I can do it this way. So if you think I got a swing, I got a higher low, I got a lower low. Now all of a sudden where that breaks here because I'm now taking that out. Right, or you can even do it right here, right? I'm taking out the swing and the lower high, lower low. All of a sudden, I'm taking this out, and I've got a change of structure. Swing. What do we do here? Up, right? So I've got separation, so I can see some strength here. I've got separation from the average. Look here. That's why this kind of range here, this kind of range here, they're just on top of each other. The market is stalled. I get way outside here. Now I come back here and I tap the center line. It's exactly what you want to see. And now I go green again. But the point being, it's not so as we were talking about earlier. What you're concerned about here is that trade doing that, right? And then, right, so as I said, this is all the market ever does, right? You're thinking, oh, what if it does that? Like, could that be just the retracement before we head down? Well, right, does that look like something you'd want to sell? I mean, you know, again, I understand completely that it's easier in hindsight, but here we've been trending up the entire day. We've just had this. It's almost like a relief sell-off here to take some of that this energy here that was fading to let it recycle. So we come down way below the Bollinger Bands, but we don't go anywhere near the 32. So it's not a dramatic sell-off. Now we're coming back again here, right at the 50. Now as that starts to push away. Right, here's the acceleration. Then you get another little pullback right to the 21. What do we got? Let's assume you're not going to get all of it. Let's see, even if you got a portion of it, right? There's probably $500 there to get. You got stopped out on the way back at that high. There's 425. It's not bad, right? I mean, what happens next? Right now, the 21 period's going red here. Could we possibly make some sense of, okay, well, this is a little consolidation we had right here. Looks like we're coming back into that consolidation. We just did a measured move. Now I've got a swing. Remember, it's all the market ever does. All right, so you might look at this. This is a series of threes. Right, that's all it ever does. Swing, retrace. Now I'm right to a golden zone. So I'm already on alert. No algorithms will be active here. What when I see the TDI? Well, number one, I'm not even going close to the lower bands. I'm right at the 50, right? That center line, that yellow line, very important. Just like the 50 is important to the RSI. Up I go, right? So from here, and you might even say, "Oh man, I wasn't sure," so I wait. Well, it gave you two tries at it. You know, here we've got the little swing, we've got this swing, and then we get a little retrace right there. Now look below. There's you barely see it. Then this one's a better example. All right, I get it again. Swing, retrace, right to the 21. I mean, can you script that any better? Look at that. Can't cross the average. The center line, right, is sloping up now, so that trend is intact. I've got that pattern again. So right here, this is actually this is the target from this. So this measured move is hitting its target right here. Now maybe you didn't get that one for whatever reason, but could you have gotten that one? Right? You know you have a target here, 725. Now note here what's happening. All of a sudden now we're getting outside of the upper Bollinger Band. Upper. Now I'm beyond I'm beyond the 68 as I'm tapping the outside of the Bollinger Bands here. Now this is end of the day on Friday, right? So whether you'd be trading here or not, but these are certainly valid examples. Swing, retrace, swing. Oh, all of a sudden change of character here, but note, can't even get to the center line. Can't get anywhere near that pivot. Can't get, I mean, again, we can't even get to the center line. Back down the average. Boy, here, we'll talk about a nice trade. And again, I don't know if anyone's trading this time of day. It's a little more dangerous to trade this time of day, but look here below. Right, just pinned, right, all the way down, all the way down. Oh God, I'm running long here. Let me go back to just another day here. I'm pretty sure there's a whole lot to learn there on Friday, but let's go back one more day here and then I'll wrap it up here because I think this is pretty obvious here. Let me tell you, I'll take the measured moves off here and we'll just focus on the TDI. I think we can probably bring this down here. So let's go back just to the start of the day. A little more volatile on this day, right? So this is Thursday. So here's the initial move, right? That's immediately sold off, right? So the swing retrace, that's almost 100% retrace of it. Again, I draw your eye to the fact like, whoa, that looks like a pretty good move down. Oh, looks like a measured move we got right there. So there it is again. All right, this is the DNA of the market, right? It's all it does all day long. It's just do these little measured moves, right? So if you're not familiar with that, I encourage you to go watch our measured move or our auto fibs, so you understand what that is. If you don't know what that is, you need to, right? I would encourage you to watch that material. All right, so there it is. Now, right, so note here. So it looks like, so you can see the measured move, right? We just looked at it, right? So here's the measured move. As I'm hitting that target, wait, do I feel like this is really going to be threatened down here? I mean, again, I know, it's easy in hindsight, right? So we're coming into the prior lows, but look, oh, I can't even get to the lower Bollinger Band before I start to kick again back the other direction. Do I want to sell it here? Do I look left? Do I want to sell it there? Look below. Right now? Yeah, sure. Okay, maybe it keeps going. Maybe it keeps going. But you got your answer pretty quickly here as to whether or not that was maybe just going to be another rotation. Do I get change of character here? Well, I got swing. I got a lower high, lower low, lower high. Lower low, oop, higher high, right? Taking all that structure out. Excuse me. Swing, retrace, higher low. Swing. Oh, I don't get a higher high here, but I get a higher low. I get essentially a double top. Now, so here you might have been reluctant to be trading, right? So this is like, oh, okay, I don't know what's happening here. That just looks like chop. Market hasn't really decided what it wants to do yet. Are we going down? What are we doing? This would be dangerous to be trading in. Look, right, as I talk about, this would be a little dangerous to be trading when everything's just bunched at the middle. You might get a flyer out of that. There would have to be something else, right? Maybe you got a burst of delta or big volume came in here. Oh, if you're using some of our other tools, there might be some tells within that. But from here, I've got a swing, higher low. And I got a swing, higher lows, higher high. I mean, here it is again, right? Almost exactly like the prior day. Look, we just looked at it on Friday. How do you know? How do I know? Swing. Now, where am I? Right? Because you're here. You're saying, well, how do I know that that's not going to keep going? Well, of course, you don't know, right? It could go down, but okay. So first thing, where am I? Right? I'm right at a golden zone. Do I want to buy into that on the assumption that that's going to break? Maybe not. All right, look, so here, this is particularly good where we can really start to see the benefit of this for divergence. Now you can see it here as well, but this is really striking because here I get outside of the Bollinger Bands. Now here I get a higher high. I'm popping the IB high here, but look at the divergence in the RSI. Nope. All right, so maybe maybe you didn't get this one off of the divergence, although that would have been very tradable. But no, McGinley's green, everything's rising, the center line is rising. So this is a little bit, maybe that's easier in hindsight. Okay, but so you didn't take that one. Now, well, all of a sudden I've got this. Right, look below. God, that thing sticks on your mouse. Right? Do I want to be a buyer here? I mean certainly that look at that moment in time right there, which of course you don't know, but you're right here. If I'm looking down here, does that look like it's about to rip? Maybe, right? But I think that what's important here is we don't even, I mean, if you had gotten this thing to rally here and you'd started to make that move, well, you'd be quickly out here. I mean, you'd be stopped out, or you would just exit the market here, because what you're anticipating doesn't happen. Right? Remember, it's so much. It's often it's not what the market does. It's what the market is supposed to do and doesn't. Right? You've heard me say that in other videos where we're looking at Bitcoin as crypto. If it's going to go up, if we're going to continue to go up here, you would at the very least think the RSI could cross the average. We'd show that strength. Well, you might have been, okay, I wasn't sure here. No, we're in the upper quadrant here. I wasn't sure. Okay, so does it happen again, right? I mean, the market just gives it to you all day long, right? All right, so here's another one. Doesn't get to target. Could you have made money there? Well, let's look down below, right? So you're in that pocket here. Oh, you probably would be noteworthy here that you're coming back into that pivot. So you're coming back into this prior support now becomes the resistance. I'm right between the 50 and the 618. Okay, right? Maybe that's a little too easy after the fact. But look below, right? So I mean, we come into that, and as we break the 21 period, we start heading lower. Look, if you waited for it, right? If you got here, now remember, this is a good example. What is the market supposed to do? It's supposed to get to that target, right? So here's the swing. Here's where the algo fired. It's supposed to get to that target. Well, look what happens below, right? We can't. It's not strong enough to get to that target. We're not strong enough to avoid the divergence. So what do I see here now? I get classic divergence. Right? I get lower price here, but I don't get lower price in the RSI, right? And now I'm crossing back above the average. Now, is this a trade you would take? Not likely, right? There's not enough here to support the idea. I bang into the 21, I pull back. There's not enough here to support the idea of a trade. But if you were short off of this retracement here, this would be, so very least you would want to tighten up, or maybe your stop's on the other side of one of these. Oh shit, one of these pivots. Get rid of that. Just thinking how someone might trade that. If you're in that. Oh, I mean, that could have been a scratch, right? Maybe a small loser, right? Because you were looking for the push towards the IB low, towards the target. You don't get it. Now, at this point here, when the RSI crosses back over, you'd want to get out of that trade, or whatever your stop was, right? Likely that's the time to be exiting into the market. So up we go here. Now this is, again, note that I get to see so much more in the TDI than I do in the RSI. Can I see the divergence here? Yes. Do I see it here? Yes. But note, I can see like, whoa, this was a big thrust here. I went well outside of the Bollinger Bands. So if this is going to swing and retrace and just carry on, you would anticipate that I'd get something similar. Swing, retrace, whoa, there, I'm going. Swing, retrace, up I go. Here. Well, first note that I'm not even close to the 68. I'm getting the signal line and the RSI up at the edge of the Bollinger Band. It's an ideal spot for it, right? The only thing that would make it better is if this was all above the 68. But I've got it here. Down we go. Okay, so let's. What did I just do there? Hang on. I just went off a day. Hang on, I know I'm running long here. Oh, sloppy fingers. I hit the Spacebar. I think it took me back a day, so I'm going to lose my spot. Yeah, here we were. Okay, I think this was it. Okay, so here's yeah, that has to be it. Right, so we had the big push out. Here's the move that fails. Now as we come down here, again, I can't get to the lower Bollinger Bands. So I'm just getting a better visual representation. Now as we start to fall, right now, so as we get the change of trend here. I'm not sure I'm picking up in the same spot or not, but note here as I swing up here and I go up towards that pivot, I can't get outside the Bollinger Bands, which I did easily here because we went from low contraction, or pardon me, low volatility to an increase in volatility, so it was easy for it to get out here. Now I've got a wider range of Bollinger Bands here. I can't get out. Now I'm back down. Now is this the trade you're going to take? Maybe not, but this is the trade you want right here, right? Remember, that's all the market ever does. I'm having trouble getting that off my mouse today. Get off of there. Okay, swing, retrace. Swing. Right? Do I want to be a buyer here? I know, easier in hindsight. Looks like pretty good support. Can't get anywhere near. I can't cross the river. I just am drifting lower and lower towards the outer edge of the river. All right, so I come down here. Now here, you see it again. Right now here we're far outside. Now I've got width here of the Bollinger Bands. I get outside of it. I come back in. All right, we're never teaching that what your goal is to try and pick the turn, right? If you do, great, right? I mean, you know that's a great trade if you can get it, but it's a low probability trade. Right, you're not going to get it. Well, it's a high risk trade. Let's say it that way. So when we make the little push up here, we can kind of simplify it here, and then I'll wrap it up here. If we make this push up here, okay, well, at that moment in time, you might say, well, hey, I can't get outside of the Bollinger Bands. Right, so how strong is that move? Well, do I get to the other side? Do I even cross the center line here on the retrace? So if I carry that forward, as we come down, right, I've got the conditions that I'm looking for. I don't want to see that cross the river. And if I'm thinking bullish here, I don't want to see it cross the center line. Would you've got this one? Maybe that would have been a tougher one to take. That would have been trickier to get that one. So iffy here. Let's assume you didn't get anything here. Now we go up here. So this would draw your attention here that I've got this very strong move because I'm getting outside of the Bollinger Bands. That's why we highlight those, because we want you to pay attention here. Hey, something is up here. All right, but look where I go. Oh God, on the video the other day, there's some clues here as to what was here when we look at the volume. But here, as we just look, if you were not using volume, you're just looking at the TDI here. Well, is this an area to be paying attention? Well, number one, okay, I've got a set of 50s and golden zones right here from multiple pivots above, so I know this is an area where an algorithm could be active. Clearly the 21 period is bullish here. Is this the trade you'd get? Maybe not. Maybe not. Is that the trade you need to get? Well, I would propose this one might be easier, but really this is the one that you would be the easiest of all to get, right? It's just more tradable. I've got a swing, I've got a retracement, I'm coming back to the 21 period, look left here. I'm right back to all that structure. Now as I start to come down, right about here, now I'm crossing below, right? So the move, the retracement move is not strong enough to even get to the center line. Can't get to the 50. Remember, this is like a dynamic 68, 32, and 50, right? So these are just on the fly dynamic. So that would have been like a 50. So I can't even get there. And then I roll over again. Now, if you didn't get that one, it gives you another one. All right, so you don't have to feel like, oh shit, I missed that one. Right? It gives it to you again. Now here we didn't quite make the McGinley. Is that a decent trade? God, I can't get that thing off my mouse. So look here. So here's the retrace. Here it is right here. We can't even make the 21. Can't make the center line before we fall over again. Could you have made some money there? Oh, here, let's say you took the break there. Oh, it was there, right to the low, 1100. Let's assume you're going to get stopped out on a kickback here. So there's 500 right there. Let's assume you're going to get stopped out as this crosses back the other direction. Well, you still had 515 right there. Now, do we see this is now you would of course, right? You're not going to know that's coming right here. This is 4 o'clock, and that's the Amazon earnings, so you wouldn't have known. But interesting, like swing retrace right down here. Okay, I think we got that covered here. I probably did more than I needed to there. There's just lots of examples here. This is a really useful indicator. I think it's far superior to just a traditional RSI. It's just you're getting so much more visually here. So a very nice complement to whatever you're currently using here, and we built it into the graphical order flow so that you get some of that visual representation of momentum and volatility. So we think that this would be very useful to put into whatever template that you're using. As is always the case, feel free to request a 5-day trial with all of our indicators, right? Anything that you want to try, you can try them, any of them. Full working versions for 5 trading days, right? Now calendar days, 5 trading days. So if you request a demo today or a trial today, you'll have it for the full week. I think it much like any indicator, you have to get familiar with how it moves, right? And some of the tendencies that you'll glean from it. This is the default settings that we're running here. I should note here, but you can experiment with them as you like. The Bollinger Bands are a 34 period. The RSI is a 21 period. Right, the price line is a 3, and the average is an 8, and then the volatility expansion is 1.62. So all fib numbers. Call me superstitious. Right, all fib numbers, but you can play around with whatever you like and get it to what suits your style or your approach to trading. Maybe you're trading on a 5-minute, and this wouldn't be appropriate. Right, maybe you go down to a 13 RSI and a 3 on the average. Right, you play around with it to whatever, however you approach the market. If you're trading with tick charts or Renko charts, so you just adapt to the numbers that will suit your particular style. But I think you'll find this is really useful indicator. Okay, with that, I wish you good trading for the week. And as always, if you're interested in a demo, just let us know. Okay, guys, talk to you later.